Hey investors, I've missed out on the Tesla rally so far because I was not a big fan of Tesla. I didn't really understand the company actually. To me, it was just another car company. But I'm trying to understand what all the hype is all about. And of course, there are certain things that I do like about Tesla. All cars will eventually go electric, and Tesla is leading the way in electric cars. I don't know though when that will happen. It could be 5, 10 years, or even 15 years from now. And I don't know if Tesla will be the leading electric car player in the future. But since Tesla fell quite a bit, it was about $500, and now it's fallen to about 418, and likely will fall another 6-7% when the markets open on Tuesday. I thought this is a good time to take another look at Tesla and learn more about it. So if you're keen to know more about Tesla like me, then carry on watching. Let's find out a little more about Tesla's business. So Tesla is mainly a car company, and so let's look at the vehicles delivered. So in the past they had about 20,000, 25,000, and now they're delivering about, let's say, more than 80,000 vehicles. So there's definitely a lot of growth going on. The most popular vehicle seems to be the Model 3. That seems to make up the majority of the sales. The Model Y seems popular as well, is gradually taking up a bigger portion of sales as well. So let's look at the revenue segments. So as I mentioned, Tesla is still mainly a car company. You can see that auto makes up the majority of revenue at about 5.17 billion in the last quarter. Energy makes up about 370 million, and services or other makes up 487 million. I'm not particularly sure what services is made out of, but I think it mainly constitutes services to for repairs, maybe for Tesla cars, or maybe for the supercharger network. But in total, this segment plus the energy segment makes up less than you could say 900 billion or 900 million, sorry. So it's less than 20% of the business. So it's not really a major factor right now. So Tesla is still going to be about selling cars for the immediate future. Tesla has definitely been growing its revenue as well. You can see in Q3 of 2016 it was 2.29 billion, and in the last quarter it was about 6.03 billion. So there's no doubt that Tesla cars are getting more popular and Tesla is selling more cars. You can see Tesla always struggled to make an operating income profit. Recently that seems to have changed. It started to make a profit, but nonetheless the profit is still quite small. So net income has a similar trend. Recently Tesla has been generating a net income. You can see that gross margins hover around 20%. Operating margins have been quite a ride, but now they are about let's say 5%. So this seems in line with what a general car company produces in terms of operating margin. So I mean, it doesn't really produce the kind of operating margin you expect from a tech company like maybe 10, 15, 20%. At least not yet. Maybe in the future it can. So let's look at what the Tesla mainly spends on. It does have a good, decent R&D budget, but the majority of the costs still seem to be on the general expenses, probably including some marketing. The R&D budget has stayed more or less stagnant over the last few years. So let's look at the growth rate. I think this is something that gets a lot of Tesla investors excited. So Tesla has seen some very high growth rates in the past, up to 128%, This was in Q3 of 2018. And in the last quarter, they saw a decline. This is probably due to the pandemic. But just before that quarter, it saw about a growth of about 31%. So pretty decent, pretty good. So cash flow, operating cash flow and free cash flow have been pretty okay, I think. I mean, they haven't been as negative as the operating profit or the net income. They probably turned the positive even earlier than the operating profit or the net income. So there's definitely not a company that's going bankrupt. Yes, a lot of cash going through the business. So speaking about cash, right now Tesla has one of the highest amounts of cash it's had in quite some time. There's about 8 billion plus in cash. It's been using its high stock price as a good way to generate more cash, and I think it's probably going to generate another $5 billion using the stock again by issuing more stock. So this company is cash rich, you could say, now especially. Tesla today is quite different from the Tesla of the past, which didn't have much cash. So let's take a look at some valuation metrics. So Tesla looks like a decent company to me, but do I want it in my Project 1 million portfolio at the moment? I'll need to look at the price and the revenue growth prospects and come to a conclusion about whether I feel it's right for me to own it. So you can see that the price to sales ratio is about 14.75. So in isolation, this doesn't seem very high. I've invested in companies like Beyond Meat that have a price to sales ratio of about in the 20s, and that's also a sort of manufacturing company, so the margins are not going to be extraordinary. I expect Beyond Meat at best to have margins of 5, 10, maybe 15%. So that's something that Tesla will also achieve eventually, probably. But the reason I invested in Beyond Meat is that Beyond Meat has a revenue growth rate of above 50%, and I expect it to maintain that revenue growth rate for many years to come, actually. Beyond Meat also has a lot of competition, but I just feel that Beyond Meat is probably one of the better plays in the alternative meat category. So you could come to a similar conclusion about Tesla. Tesla will also have a lot of competition going forward, but it's probably one of the better and leading players in the electric car segment. So let's look at that revenue growth rate a little more. So last quarter wasn't good, like we mentioned. It declined actually. Over the past 5 years, the revenue growth rate has been 50%. So if we could maintain 50% for the next 5, 10 years, then this price to sales ratio actually doesn't look expensive to me, I think. I've done a separate video about the modified rule of 40. So if you take the revenue growth rate plus the operating margin and divide it by the price to sales ratio, and if you get more than 5, then it could be an attractive opportunity. So 50 plus, let's say 5, 10. I'll be a bit generous. I'll give it 10 years. So let's say 60%. So 60 divided by 14 or even 15 would be about 4. So it doesn't seem the most attractive price to me at the moment. And that is provided Tesla can maintain 50% growth rates going into the future. So to me, the key is really can Tesla maintain that revenue growth rate. It has a lot of things going for it, being a first mover in the electric car space, or one of the first movers. And then there's a lot of excitement about Tesla's autopilot system. If you can really change the game with its autopilot system and make its cars autonomous or even semi-autonomous, I think that would give you a very strong competitive advantage compared to other car companies. But the thing is, I'm not so sure that Tesla's autopilot system will be that good. I'm not so sure about its battery system either, that this will be the best battery system for years to come. So recently I was watching Bill Gates' channel, and I saw this video about how to build a battery, better battery. And so the company involved here is a company called QuantumScape. And so it basically uses a solid state battery, which it says is better than the conventional lithium ion battery, I think, which is semi-liquid. So this allows it to produce a better range and it also charges faster. So battery technology, I think, will keep evolving, and it's good to see a company like this produce what seems to be like a better battery. So this company will probably not only supply its battery to a company like Tesla, but it could also supply its battery to a lot of other car companies. So those car companies will instantly have access to a very good battery system. So that makes me worried about Tesla's competitive edge in terms of its battery. So recently I watched this video about the CEO of Nvidia driving around this Mercedes. So basically he really showed us what the luxurious Mercedes empowered by Nvidia's software would look like. And it seemed pretty good, and also probably it's something to look forward to in terms of Nvidia powering cars with its self-driving technology. So this got me thinking as well, what if Nvidia becomes like the best self-driving technology out there, and it decides to just supply it to other car companies. So again, I mean, then Tesla's competitive advantage would be eroded. So I don't think it's a clear-cut case yet that Tesla's autopilot system will be the best self-driving technology. And there are competitors. I mean, Waymo seems to be the best, but there are also others like Nvidia, and also I believe Mobileye by Intel. Recently also I came across this company called Lucid, and they also are producing electric cars, and they seem to have now the highest range in terms of electric cars, so it goes up to about 500 miles. So I mean, this seems to be even better than Tesla, and I never even heard of this company before, or at least until a few weeks back. So I don't know if this is a very accurate claim, but I guess there's some substance to it. That's why they are making this assertion. But again, my point is that another company could come up with a battery pack or electric car that can have a higher range than a Tesla. And there are a lot of car companies with a lot of money out there who can invest in the technology to kind of produce that kind of super electric car. So I'm not sure if Tesla will always be ahead of the pack. And that is what worries me about investing in Tesla. Of course, if the price is right and there's a significant margin of safety, I would invest in Tesla. Probably right now I'm thinking about $200. That would be an ideal range for me to start investing into Tesla. But it may never go down to that price, and I may never get a chance to invest in Tesla. But I think I'll be okay with that. As I gain more knowledge about Tesla, maybe I'll be willing to buy at a higher price. But for now, I think I don't want to buy in a period of peak optimism for Tesla stock. I'll probably look at it more seriously if it goes down even further, or if there's a period of pessimism. What do you think about my analysis of Tesla? Do you think I should immediately add it to Project 1 million? Or do you think I should, wait a while and, add it only if I feel I'm comfortable with owning it? There are a lot of investors who have made a lot of money on Tesla today, and I feel a little left out. But, for me, I'm basically investing my own money. So I want to be very comfortable with what I'm doing with my own money.